Hi and welcome to this another episode of ECCB Connects. In this week's program, Governor of the Eastern Caribbean Central Bank, Timothy N.J. Antoine, reports on the bank's performance for the 2018-2019 financial year. Stay with us. We'll continue in a moment.
The new family of EC polymer notes.
What is different about these notes?
The feel.
Polymer notes are made from a thin plastic film which makes the notes feel smoother than the paper notes.
The orientation.
The notes have a portrait orientation. You will read the notes from top to bottom instead of left to right as you do with the paper notes.
Unique tactile feature.
The front of each note has raised bumps at the top left-hand corner. These bumps form shapes that are familiar to you.
Holographic foil strip.
This feature is on the $20, $50, and $100. When you tilt the notes, the images and colors in this section will change.
New image on the $50.
The back of the $50 bears the image of former governor of the ECCB, the late Honorable Sir K. Dwight Venner.
New signature.
All the notes bear the signature of the current governor, Timothy N.J. Antoine.
EC polymer notes. Cleaner, safer, stronger.
Governor, the Eastern Caribbean Central Bank published its annual report for the 2018-2019 financial year at the end of last week. And again, the great news is that for the third consecutive year, the bank is recording a profit.
Yes, well, thank you, Shomalon, and let me greet all of our viewers wherever you are in the world. And absolutely right, we're very pleased to report very strong year in terms of our financial performance. In fact, the bank recorded a net profit of 32.7 million, which is more than triple what we achieved last year. So we're very pleased with that performance.
Great news indeed. What contributed to the profit?
A combination of factors. Certainly on the revenue side, the bank benefited from higher returns on our reserves. As you know, we invest our foreign reserves in securities, essentially mainly in the US, but elsewhere. And the markets improved, so we got higher returns on our investments. We also did a number of things in respect of expenditure management. We cut costs on some key areas by renegotiating several contracts and by also some additional operational efficiencies. So a combination of income and expenditure allowed us to achieve that performance, but particularly on the income side with respect to the returns on our investments.
Okay. For other companies, a profit is great news for the shareholders. For the ECCB, what does this profit mean for the people of our region?
Well, it means that the bank is, first of all, being well run in terms of our financial stewardship. And that's important because while the bank is not for profit and therefore does not exist to make a profit, it's important that the bank is profitable. We may have the odd year when it's not, but as a rule, the bank ought to be profitable because it sends the right signal. I think to our licensees, for example, our banks have to run and be profitable. If they don't, then depositors would have difficulties. So it's important. But beyond that, more importantly, the profits of the bank are then used to build the general reserves or the capital of the bank, which essentially provides a buffer for the bank in the event of a downturn. So what we essentially have done for the last 3 years, this year included, is to take those profits and put into our reserves, our general reserve, to build a buffer such that in the event that there is some downturn, whether it's in terms of our revenues or the global economy, the ECCB will be able to continue to deliver all of the services that are required of the ECCB without any dislocation or without any difficulty.
So really saving for a rainy day type.
Precisely. And by the way, Shomalan, that is precisely what we encourage our governments to do when we speak about the fiscal resilience frameworks, which is to say, putting your fiscal house in order such that you can engage in counter-cyclical fiscal policy, which simply means when the economy is up, you spend a little less. When it's down, you spend more. You cushion the effect and you, over time, even out the performance of the government and the performance of the economy. So that is essentially what we are doing at the ECCB with our financial performance.
Let's now look at the overall performance of the bank. Throughout the past year, the bank continued to work on its 2017-2021 strategic plan. First of all, are you satisfied with the rate of the progress of the implementation of the plan?
We're doing well, but I always would like us to do more. I mean, it's just natural. We're anxious to deliver for the people of the ECCU. There's a lot of things that we are doing, and certainly I am very encouraged by the progress we've made in respect of the strategic plan. I would love to have seen a few things implemented even faster, to be quite candid. But, you know, we are a currency union. We do engage. So, for example, when it comes to legislation, it does take a while. There are 8 countries involved, and as I always tell people, we're going to get there, and when we get there, we're stronger together than if we ever did it separately. But it does take some time. So I would wish we were a little more advanced, but I'm certainly encouraged by the progress that we've made. But before we continue with the strategic plan, I think it's important to just step back and recognize upfront that the macroeconomy improved. So, and I suppose that's part of our strategic plan in respect of our growth and competitiveness and employment. But I want to just start with that. The economy in the ECCU actually rebounded very well in 2018. Economic output was around 3.4%, which is essentially more than double where we were a year ago. Recall in 2017 the devastation caused by hurricanes Irma and Maria. So the ECCU has rebounded very well. Obviously, that includes growth in a number of countries and recovery, reconstruction in Dominica, for example, Anguilla, and even Barbuda. Unemployment has also fallen, and that is very important. So in a couple of our countries where labor force surveys have been done, we've actually seen a downturn or a reduction in unemployment, including among our youth. And that is a very important development for us. This is a very important metric in terms of socioeconomic transformation and socioeconomic development. So that is a very pleasing thing from the macroeconomy side. And in terms of inflation, inflation was relatively subdued. So that's just the quick macroeconomic context. And then we can talk specifically about the strategic plan initiative.
Okay, but before you go on, as you're talking about indicators, what about what has been happening with non-performing loans? Because that has been a big issue.
Right. So that remains somewhat stable, still high. So we're talking around 11.3% currency-wide, currency union-wide, which is to say, in terms of the total bad loans in the financial system, in the banking system, we have about 11.3% of bad loans as a percentage of the total portfolio. Now, it needs to be said that this is an average. So there are countries and there are banks where the non-performing ratio is less than 5%, which is the international standard, which is our target. We actually have banks that are as low as 3%, 4%. But we also have banks that are in the mid-teens or high teens. On average, we end up around 11.3%. That remains a concern for us. And that is something that we continue to look at very carefully. And that leads us into initiatives like the Credit Bureau and like the Eastern Caribbean Asset Management Corporation, which are intended to help address elevated credit risk.
So we now go to the strategic plan, that 5-pillar plan. What were some of the major achievements over the last financial year?
Well, you certainly have to start with the monetary stability, or strong and stable EC dollar. Our reserves were maintained, our reserves grew, and in fact, the backing at the end of the financial year was around 98.4%, thereabouts, well in excess of the 60% that is required by law. So we've maintained that, and that is something we watch on a daily basis. That's very important. It brings so many benefits to the people of the currency union that one should never take it for granted, and we certainly never lose focus or lose sight of that very important mandate in respect of exchange rate stability. So again, I mean, we've been at it for a while, but it requires work and intentional effort to maintain our strong position in respect of our foreign reserves and the backing of the EC dollar. Now, in terms of the financial side, I certainly think we made additional progress in respect of what we call the rollout of our supervisory framework with our banks. So the public doesn't see that, but a big part of the role of the ECCB is to supervise and regulate commercial banks. Make sure that they're doing what they're supposed to be doing. How do we do that? By a combination of off-site surveillance and on-site inspections. So every 5-6 weeks, there's a team of the ECCB, bank supervision, in a country, in a bank, doing exactly that and making sure that their banks are supposed to be in what they're doing. After that review is done, a report goes to the board and management, and any remedial action that is required, obviously, is addressed and has to be addressed within a time frame. That's a very important piece of ensuring financial stability and ensuring the protection of depositors. So we continue to improve in that area. We hired additional staff. We've been in the field and we've also streamlined our processes to make sure that our reporting is more timely. The banks hear back from us a lot faster with the specific action points that are required for improvements. So that was an important development where we completed. In fact, under the Banking Act, we're required within a 3-year cycle to ensure that we do a complete review on site of all our banks, and we were able to accomplish that.
You mentioned the public doesn't see, but the public feels, because really this essentially is protecting their money at the banks, and if that's not happening, you will feel it.
Absolutely. So it's a very important service that is provided. That's part of a very important role of the central bank, and we have to make sure that we properly resource for that, and we have taken the additional efforts and steps to make sure we deliver that service. So that was definitely an area of improvement in the last year in respect of the financial system.
Okay, so with respect to the other pillars, we have debt and fiscal sustainability.
Yeah, so 2 things perhaps we can highlight there. One is that the debt to GDP ratio is coming down. So the Monetary Council set a target of 60% by 2030. And we are seeing member countries coming down. So on average, at the end of the 2018 period, we were down to around 67, 68%, which is the lowest it's been in more than a decade. And a lot of that has to do with improved fiscal performance by our governments. In some cases, it also has to do with CIP, Citizenship by Investment programs, which have helped to support the non-tax revenue side of the fiscal accounts. So we have seen improvements in the fiscal operation. Now let's be clear, the governments are still challenged. There's still more needs than money in terms of what the governments are able to do. But certainly the fiscal situation has improved. And I think we also seen that in areas like the regional government securities market. So when you look at the fact that the governments have been able to raise significant money there, the rates have been very low, in some cases as low as 2% for the 91-day Treasury bill. That is a signal that there is confidence by investors and that the investing community actually sees the improvement in the fiscal performance of our governments. And so we just want to commend the governments and encourage them to continue to build. And remember what I always say, build fiscal resilience, because we have to be ready for a downturn. And so on the fiscal and debt side, we saw improvements there. The one other thing I'd mention under this pillar is our work in respect of advocacy for the embedding of disaster-linked clauses in our sovereign debt contracts. To put it very simply, we have been advocating internationally, we meaning the ECCB, that all debt contracts for small countries, including small states, including those in the ECCU, ought to have in their contract a clause which says if there's a shock, if there's a hurricane, for example, or a major shock, that there will be a standstill on payments to give the country that is impacted the liquidity it needs to begin its recovery in the shortest possible time, and then to resume the payment at a later date. And that date is specified, whether it's 1 year later, 2 years later, 3 years later. We actually pioneered that effort in Grenada in 2014 and 2015. And we've been very clear that we need to see that widespread adoption across small states. So what did we do? Through the Paris Club Forum, we made a strong advocacy. Canada, as our G7 member, came along and was very supportive, and we commend Canada for that. Canada used its good offices, and ECCB, wrote to the IMF and World Bank, both the managing director and the president of the World Bank, asking them to work with us on this particular issue. They accepted the challenge, worked with us, and with the International Capital Markets Association came up with a term sheet that can be used in all debt contracts. That's a big advance. The next step is really for widespread adoption. And basically what I've said is that just like we were able to finally get the collective action clause, maybe back in 2002, if I recall, maybe a little earlier, we now wish to see that a similar adoption be made of what we call the hurricane clause, but it's really disaster linked, so it's not just hurricane. And we have also written to the Paris Club, urging the Paris Club to take the step to make that automatic in its arrangements. So I mentioned that in the context of fiscal and its sustainability, but also in the context of building resilience in the Caribbean. Remember, after the hurricanes in 2017, we said we want to become, CARICOM declared, the first climate resilient region in the world. And for us, that means building resilience at various levels, fiscal, physical, infrastructural, and so on. And that is an area we believe is very important as well.
Yes, it is, because number one, the region is vulnerable to natural disasters. Absolutely. And we have seen the devastation, so this is indeed an important step. Let's now move on to growth. You mentioned the reduction in unemployment, especially among the youth. So let's now look at the growth, competitiveness, and employment pillar.
So yeah, I mentioned growth, 3.4%, double what we did the previous year. Unemployment is down, which is good. Competitiveness is still a challenge. I think one of the key metrics used is the doing business ranking. And unfortunately, our region is not doing so well. There are various reasons for that, but that's an area where we believe we have to do more in terms of improving our business environment. And that is not to say that the countries did not make efforts, but the rankings are relative rankings, which is to say, if you move 2 steps and another country move 4 steps, you actually fall back 2 steps. That's how competitive the world has become. So there's an additional effort required to really improve our rankings, and that is something the ECCB is working with the countries, including the World Bank, to try to see how we could address that issue. So for example, through our Growth and Resilience Dialogue, which we hosted our 3rd dialogue in February 2019, we have attempted to bring forward these issues of competitiveness, and we will continue to do that sort of work. So it takes a while. I mean, another area that really, and that's a challenging area, is really the high cost of electricity. And that's a huge issue that's impacting our competitiveness at the level of the firm, business. The fact of the matter is that in the Eastern Caribbean, we have some of the highest rates of electricity in the world. The price, over 40 US cents per kilowatt hour. That's a drag on growth. So whether it's in tourism or in manufacturing, it's an issue. What's the fix? The fix is we need to bring additional investments into the renewables space, the renewables area, to try and diversify and lower our costs. So for example, what Dominica is trying to do now with the geothermal project is very important. And we're very supportive of that, because not only will it make Dominica more resilient, but ultimately it will make our region more resilient and more competitive. Last time I checked, only about 6% of our electricity in the region was generated from renewables. And we need to get that to 20-25%, So there's quite a bit of work for us to do in that area.
The last pillar, organizational effectiveness. This is where the ECCB is really trying to improve its own performance. major achievements under this bill?
Well, I think we were able to complete an HR strategy. So we did some soul searching, some introspection about areas where we need to improve. Because given all that we're trying to do under the strategic plan, the question has to be asked, are we fit for purpose? Are we well resourced? Do we have the right skill set? So that sort of review has been undertaken, and we are now staffing up, taking on additional staff to make sure that we can deliver the mandate. And we've also been bringing on interns to work with us, including our Bright Sparks program. And I know you did a whole program on that. One of our Bright Sparks, we're really proud of Lyndon, and before him we had Shafari. But these Bright Sparks, and we're bringing in more, are intended to bring talent, give young people a chance to get work experience, and make a contribution to their currency union, and to launch them in terms of their careers. So we certainly are pleased about that. We're embarked in serious training. I mean, we've tripled our budget for training, and we are giving our staff exposure practically around the world now in terms of training in various areas that are of interest to the bank. And of course, training also involves leadership development, and that's an area of focus for us. We're doing collaborations with other central banks, and of course, we've improved profitability, which is important in terms of, building our buffers and also demonstrating strong financial stewardship. On the digital currency side, we launched that in March. I've just been really blown away by the interest, not just within the region but outside, over this particular project. Our motivation, like I said at the launch, was really to lower the cost of payments and speed up payments, address the issue of reduced use of cash, and also look for other efficiencies in terms of KYC protocols. There's been significant interest, a lot of offers of support, and we're looking forward now. So now, as you know, we're in the development and testing phase, which is 12 months, and then that will be followed by the live implementation phase of 6 months. A lot of people have come forward and said that they're interested. We will obviously have 4 pilot countries. We will name those countries in due course. We will also have pilot partners that we will work with, and ultimately we will be in a position to essentially roll it out to the public. So more on that will come. The other area is the polymer notes. And that's very important to understand. As I said at the launch, we are not going to eliminate physical cash. We are not trying to do that. What we want to do is reduce the use of physical cash for the reason that we advance. And so, mindful of that, in parallel with the digital currency launch, we've also come out with a new note, the polymer, an entire family of banknotes based on polymer. And the most exciting thing about that for me really is that tactile feature for the visually impaired, the blind and visually impaired. And the response from that community has really been so positive that it's really been touching to see how gratified, how empowered they feel about this development. We took them into account. We provided for them, and in so doing, will improve their quality of life in a very profound way. And not just, in fact, for the blind or visually impaired, because even for those of us who have sight, it's a utility to be able to feel your notes and know what you have in your hand. So that is something that pleases me. And of course, the second reason is the honoring of Sir Dwight on our $50 note. It's a testimony of Sir Dwight's work and legacy in our bank and in our region, and we are pleased, really pleased, to be able to honor him in that way. And I know his family, Lady Ven and his family, were very grateful for that recognition. And again, I want to just thank the Monetary Council and our board for approving that recommendation. So those are, among other things, that we did. And it's an exciting time here at ECCB, for sure.
Okay. What's next then for the ECCB for the 2019-2020 financial year? What are the major projects?
Well, I'm looking forward to the launch of the Partial Credit Guarantee Scheme. We're very close now. Board is in place, staff in place, office set up, And I expect in the second half of this year for the public to start to get direct information about the offerings of the partial credit guarantee scheme. That is intended to help our small businesses, including our businesses or youth who may be involved in IT and agriculture and cultural services, among others. So that is and that is tied back to growth and employment, that pillar. So I'm very, very, very keen to see that project, that project begin. You can also expect the credit bureau. We're now in the stages of licensing the credit bureau operator, and then there will be a lot of public education around the services and the value of a credit bureau. As I've said before, a credit bureau is to support responsible lending and responsible borrowing. It works for the creditors in the sense that they are able to do better credit underwriting, going back to the credit risk issue and the high non-performing loans that we spoke about. It works for the borrower in terms of giving them better pricing and better access when they have a credit score that can be used as opposed to no information, which sometimes is what happens with our banks or credit unions right now. So I think that will help the financial system. I'm also looking forward to completing the greening of the ECCB campus. That project has now started. There'll be 2 phases, and basically what the public will see will be solar canopies over our car parks, both our staff car park and our visitor car park. But those really are going to be generating energy, electricity for the bank as we move towards our goal of becoming carbon neutral by 2022. And so that is a very exciting project, both from an environmental standpoint as well as from a financial standpoint. And I might add, it does give us the moral authority to make the argument in terms of advocacy for lowering emissions in the global dialogue. So those are just some of the things I probably could quickly mention that we can look forward to.
The tagline for the strategic plan is transforming the ECCU together, and I've heard you on several occasions inviting the people of the ECCU to be part of this process. What's the role of individuals, groups, companies within the ECCU with respect to the strategic plan?
Well, everyone has to be involved. I mean, the plan is really about us as a people. How do we move forward? How do we as small countries, small states, take responsibility for our development and work together to deliver transformed economies? That cannot be done by the governments alone, neither by business, and certainly not by the central bank. It requires partnership. And that's why I always say, almost every time I have reason to speak or do a launch, become familiar with the strategic plan and become an implementation partner. I repeat that often because I really believe that. The plan is for the people, about the people, and can only benefit the people. And so people need to know where the bank is going. And in delivering the strategic plan, we very transparently telegraphed the direction of the central bank. So you don't have to wonder where the central bank is going. What are the business opportunities? So if you're in business, you look at whether it is the digital currency or you look at the partial credit guarantee scheme or even the credit bureau, what are the business opportunities for you? If you are involved in the financial space and payments, there's a whole set of issues around payments and how we modernize our system, including use of our smartphones. So we want people to see a real benefit. I want the farmer, for example, to understand that we're getting, and I didn't mention that project, but one of the projects that we're working on is this digital economy with the World Bank. I want the farmer to know that after that farmer works hard, that farmer ought to know that he is guaranteed, he or she, a sale even before he or she reaps. And as using technology, the smartphone, you can know your market, know what price you're going to get, and you can have your product sold before you even reap, such that you have absolute confidence and certainty about your market, and you can send the product to where it has to go and receive the money in your account. That can be done via smartphones. That really is not a particularly difficult undertaking. So my point is that this strategic plan benefits the farmer, it benefits the depositor, it benefits the consumer, it benefits the business person, it benefits the governments, and ultimately the people of the currency union. Find your spot in the plan. And if you don't know, send us a question and ask us. And we'll guide you to the area of the plan that might be of interest to you. But also feedback. Feedback is a gift. We want to hear from the people. We do this in your name. We exist to serve the people of the currency union. So as we go about our business, just as with the polymer, we got all that great feedback and guidance, we need to hear from the citizenry on areas that are touching them, that are helping them, and areas where they want to see us push a little more. I shared this story with the polymer, and on the motivation in part because of fisher folk calling and saying that no tone, no soil, they can't negotiate it at the bank. And I'm saying, you can't work so hard and then you can't reap because of a toned dollar. We have to fix that. We've come up with a product that is stronger, will last longer, that's cleaner, and would alleviate or certainly reduce that hardship. That's a simple example of touching people in their real lives. And this is what the strategic plan intends to do and certainly aims to do. And we want to make sure that people feel the plan, see the connection, and also understand their role in contributing to its implementation as we move towards transformation.
Governor, thank you very much.
It's been my pleasure, and Shamalan to you and the team, Marlon, Karina, Crawford, and all the team at CRD who work on ECCB Connects. I commend you on a very good year. I continue to get very good feedback across the currency union on this program and the value and benefit for the people of our region. So I want to encourage you with the program as you continue.
Thank you, sir.
To view any episode of ECCB Connects anytime, any place, at your convenience, check us out on YouTube, Facebook, and LinkedIn at ECCB Connects.
We've come to the end of this week's episode of ECCB Connects. Remember, ECCB Connects is produced by the Eastern Caribbean Central Bank to share with you who we are, what we do, and how we serve you. Thanks for watching, and we invite you to join us again next week for another program.